The global economy was shaken to its core today, sending shockwaves through financial markets and boardrooms around the world. As President Trump's new tariffs went into effect, marking a significant escalation in the ongoing trade war. These tariffs, covering a vast array of goods from around the world, have been met with swift and severe retaliation, particularly from China. The economic tit-for-tat has left businesses scrambling to adjust their supply chains and consumers bracing for higher prices. The result? Panic selling on stock markets from Asia to Europe to the United States. Investors are fleeing to safer assets, fearing the worst. The Dow Jones Industrial Average, a key indicator of American economic health, plummeted over 1,000 points in early trading. This dramatic drop has wiped out billions of dollars in market value in just a few hours. This is a story about unintended consequences. Factories are shutting down, retail stores are closing, and warehouses are left abandoned as the ripple effects of the tariffs spread. It's about a president who believes he's playing three-dimensional chess with global trade, while the rest of the world wonders if he understands checkers. The complexity of international trade seems to be underestimated. It's about the very real fears that this trade war, if it escalates further, could plunge the global economy into recession. The stakes are incredibly high, and the potential fallout is enormous. Buckle up, folks, it's going to be a bumpy ride. The turbulence in the markets is just the beginning of what could be a prolonged period of economic instability. And to think, it all started with a tweet, a single message that has now set the stage for a global economic showdown. As news of the tariffs and China's retaliatory measures spread, the global financial community braced for impact. The initial shockwaves were felt almost immediately. A collective gasp went around the financial world. Investors, traders, and analysts alike were caught off guard by the severity of the situation. Asian markets, often the canary in the coal mine for global economic tremors, were hit hardest. The ripple effects were swift and brutal. The Hang Seng Index in Hong Kong plunged by a staggering 13.2%, its worst performance in decades. Panic spread like wildfire. Japan's Nikkei 225 wasn't far behind, shedding nearly 8%. The economic powerhouse was reeling from the unexpected blow. The pain was felt just as acutely in Europe. Investors across the continent watched in horror as their portfolios shrank. Germany's DAX, a bellwether for the continent's largest economy, tumbled 9% at the opening bell. The shock was palpable. The FTSE 100 in London, already grappling with Brexit uncertainty, took another 5% hit. The uncertainty was now compounded by the new crisis. It seemed no corner of the financial world was immune from the shockwaves. From Asia to Europe, the impact was devastating. But the real drama unfolded on Wall Street. The heart of global finance was about to experience one of its darkest days. The Dow Jones Industrial Average, after suffering its worst two-day performance in years, plunged over 1,000 points within minutes of the opening bell. The speed of the decline was unprecedented. The S&P 500 and the tech-heavy Nasdaq weren't spared either, both down over 6%. The sell-off was relentless. It was a bloodbath, a full-blown market meltdown. The financial world was left reeling, searching for answers and bracing for what might come next. President Trump has long argued that the United States is being taken advantage of in trade deals. He believes that the current trade agreements are unfair and detrimental to the American economy. He points to the large trade deficit with China, which he claims is a clear indicator of the imbalance in global trade. The imbalance in tariffs between the U.S. and other nations is another major concern for him. Trump argues that other countries impose higher tariffs on American goods than the U.S. does on theirs. He also highlights the loss of American manufacturing jobs as evidence that the system is rigged against America. Many factories have closed down, leaving workers without jobs and communities in decline. His solution: tariffs, and lots of them. Trump has signed numerous documents imposing tariffs on various goods from different countries. Trump believes these tariffs will protect American businesses and workers by making foreign goods more expensive and less competitive. He hopes that this will force trading partners to make concessions and agree to more favorable terms for the U.S. Ultimately, Trump aims to bring back manufacturing jobs to the United States, revitalizing the industrial sector and boosting the economy. He's called it a trade war, but insists it's a war America can easily win. Trump is confident that his approach will lead to long-term benefits for the country. But critics argue that Trump's understanding of trade is simplistic and dangerous. They believe that his policies could have unintended consequences. They say tariffs are a blunt instrument that will harm American consumers by increasing the cost of imported goods. This will raise prices on everyday goods, making it more expensive for families to buy the products they need. Critics also warn that tariffs could invite retaliation from trading partners, leading to a cycle of escalating trade barriers. This could ultimately hurt the very workers Trump claims to be helping, as industries face higher costs and reduced access to global markets. China, the primary target of Trump's trade ire, has shown it's not afraid to fight back. In response to Trump's tariffs, Beijing slapped a 34% tariff on all goods imported from the United States. This tit-for-tat response, while expected, has sent shockwaves through American industries that rely heavily on the Chinese market. From soybeans to smartphones, American businesses are now facing a steep climb to compete in China. The Chinese government has also signaled its willingness to use other levers, such as currency devaluation and stricter regulations, to inflict pain on American companies. The message from Beijing is clear. This is a fight China is prepared to wage, and they're playing the long game. Section 5. Washington's mixed signals, confusion fuels fear. If there's one thing that spooks markets more than uncertainty, it's conflicting information. And sadly, that's exactly what's been coming out of Washington in recent days. President Trump, while touting the effectiveness of his tariffs, has also hinted at the possibility of negotiations with China. Adding to the confusion, members of Trump's own administration have sent mixed signals. Commerce Secretary Wilbur Ross suggested that several countries were already lining up to make deals with the United States, a claim that was quickly disputed by White House trade advisor Peter Navarro. This lack of clarity and consistency has only heightened anxiety in the markets. Investors hate uncertainty, and right now they're drowning in it. Section 6. Voices of dissent. Musk and Ackman sound the alarm. Even some of President Trump's staunchest supporters in the business world are expressing deep concerns about his trade policies. Elon Musk, CEO of Tesla and SpaceX, recently broke ranks with Trump, calling for an end to all tariffs between the United States and the European Union. Musk, whose electric car company has been hurt by tariffs in China and Europe, argued that tariffs are essentially a tax on consumers, and that free trade is essential for global economic growth. Meanwhile, billionaire investor Bill Ackman, who has been a vocal supporter of Trump in the past, didn't mince words, calling the tariffs economic nuclear war, and warning that they could have disastrous consequences for the global economy. Section 7. Germany on the brink. Can Europe's engine weather the storm? Germany, Europe's economic powerhouse, is facing a perfect storm of challenges. The country, heavily reliant on exports, is particularly vulnerable to any slowdown in global trade. Trump's tariffs, coupled with his threats to impose levies on European automobiles, have sent shockwaves through the German economy. The German government, already grappling with a slowing economy, recently took the drastic step of suspending its constitutionally mandated debt brake to free up billions of euros for infrastructure spending and defense. It's a clear sign that Berlin is bracing for a prolonged economic downturn. The question now is whether Germany, and by extension Europe, can weather the storm without falling into a recession. Section 8. Oil takes a plunge. Energy markets feel the heat. The turmoil in global markets has also spread to the energy sector, sending oil prices tumbling. Brent crude, the international benchmark, and West Texas Intermediate, the U.S. standard, both plummeted over 3.5%, reaching their lowest levels in over 3 years. The drop in oil prices is being attributed to growing fears that the trade war could dampen global economic growth, reducing demand for oil. The Organization of the Petroleum Exporting Countries, OPEC, and its allies, which have been trying to prop up prices by cutting production, are now facing pressure to take further action. The energy sector, already reeling from the transition to renewable energy sources, is now facing yet another headwind. Section 9. The road ahead, a world on edge. As the dust settles on this tumultuous day in the financial markets, one thing is clear: the global economy is at a crossroads. President Trump's trade policies have injected a dangerous level of uncertainty and volatility into the global system. The question now is whether cooler heads will prevail. Will Trump and his Chinese counterpart Xi Jinping find a face-saving way to de-escalate the trade war? Or will this spiral into a full-blown trade war with devastating consequences for the global economy? The world is watching and waiting with bated breath.